All right, guys, let's just do a quick update on current open trades that we've got running right now. Let's start with the Aussie versus the US dollar. Now, we got into this last week for a couple of different reasons. We've obviously been liking some downside exposure in the dollar for various different reasons, not strictly medium-term fundamental based, but more short-term fundamental based, looking at things like positioning, looking at things like rate pricing, and obviously looking at the recent mix that we've had between inflation and growth data points from the US. Now, apart from that, we like the Aussie dollar higher for a couple of different reasons. The biggest one is just we think the markets are drastically underpricing the Aussie dollar at these levels. You know, if you take a look at the Aussie dollar from an index point of view, simple index looking at the Aussie versus all of the other major currencies, we are still trading very close to recent lows going back all the way to 2020. You know, we are trading at some seriously low levels here, looking again at the index level. And all of that is happening at a time when, from a rates markets perspective, the markets have actually shifted quite bullish in their expectations, or hawkish in their expectations for the RBA. It's the only other central bank apart from the BOJ where the markets now see a real risk of hikes, not cuts, hikes. That's 13 basis points implied tightening for the RBA by the end of the year. I just don't see that priced into the Aussie dollar at this stage. It's been a real big shift, and it's like the markets are they're ignoring this right now. And I'm not sure how long that can continue. Also, if you consider that from a positioning point of view, it is still a fairly stretched currency to the downside. I do like my odds of further upside for the Aussie. So there was different reasons for us getting into it. You guys can obviously just check out the channel for more information on the rationale for that trade. But we got into that at around 65.40. We took some profit on about half the position that we got into on Friday or last week. At around that, we got lucky, very close to the highs today, at around 65. At around 65.83, you guys would have seen once again the update in the channel. I just like the move to the upside. It enabled me to get my risk out of the trade completely. We moved to break even on the back of that. Now we've got a couple of units running, a free trade. We'll see whether we survive month-end flows. That's obviously something we need to consider both today and tomorrow. We've obviously got a ton of US data, the FOMC, NFP, I mean, you name it. It's going to be a busy one. There's a lot of risk, so I thought it was just prudent taking some off the table while we had that nice pop to the upside on the back of the dollar downside earlier with some possible, FX intervention from the BOJ. So just a quick update on the Aussie versus the US dollar. The other one that we closed out completely was our remaining units that we had running on the Aussie Swiss franc. Now, you guys know we got into this 2 weeks ago. Basically, we just waited for that. After that initial flush lower out of the geopolitical situation, we just waited for that next week to basically waited for that weekend to pass to not get any geopolitical escalations. We didn't get escalations. We followed the plan exactly like we wanted to. We got in basically as close to as market as we could at the open, and we've been trading that higher ever since. We like the Aussie higher for the reasons that I explained, and you guys know from a medium-term perspective, we do like the Swiss franc lower as well. Now, why did I take profit then if we still like this higher medium term? Well, threefold. Firstly, looking at the price action, this has been quite an extension without any real retest lower, right? That's the first one. Secondly, we got very close to pretty major resistance up around that 60-cent level. That's something worth keeping in mind. The third one is, even though the Aussie, I do think it's underpriced at these levels, positioning is still stretched short, but take a look at the Swiss franc. I mean, the Swiss franc has gotten to some levels here, which is pretty aggressive on the stretch short side. And that is despite the flush out that we had, or the recovery rather that we had in the Swiss franc on that geopolitical situation. This is just getting me a little bit concerned. We also have Swiss inflation data coming up later in the week. And what's frustrating about that is, unlike almost every other week trading this, the markets don't seem to have any, at the moment at least, any expectations for that inflation data. We've got no estimates, which is very difficult for us to know whether the markets are leaning more bullish or bearish on it. So it makes me a little bit uncomfortable at these levels, which is why I decided to just take the rest of our profit. Again, got lucky with this, very close to today's highs at around that 59.97 level. And again, the update is in the channel for you guys for more info. Now, the other one we've got running right now is the A50. Had a nice decent pop to the upside over the course of the last few days. Like the big mover has actually been the Hang Seng. I mean, Hang Seng, let me show you guys here. It's been just a monster of a move. Much bigger in comparison to the A50. I still like both of them higher. Preference here for the for China. Obviously, we've got some key data though coming up this week in the form of the PMIs, the Caixin PMIs, the NBS PMIs, all of them coming up tomorrow. We'll have more to say about that in the week ahead, but that's really going to be the big trigger or the big possible mover this week. For now, I still like this to the upside. I think once China growth can just start to show a little bit of that recovery that everybody has been waiting and watching for, once we can see some of that, I think there's going to be real opportunities here. And I think, as usual, the markets are going to be too slow to get into that. It's going to be a ripper of the move, and the markets will only notice it once the move is up massive. I mean, the Hang Seng was up over 8% last week by itself. So I think this is one to watch. Again, if the data comes in just absolutely horrendous, then I'm still going to hold on to my long, but that's really going to take out a lot of that conviction. But for now, I see no reason to get out of it for now. Still a good run to the upside, and we'll just let that remaining run and see what we can squeeze out of it. So that's just a quick update on open positions. Obviously, if we get into anything new, we will, as always, make sure to let you guys know. But for now, just a quick update on those running positions.